Founders, welcome back to the 0 to 5,000 podcast, where we obsess over the convergence of human potential and business results. Today, our hosts Drew McClure and Jordan Mitchell have another insightful conversation for you. So let's jump right in.
Welcome back to the podcast. Today, we are joined by Jonathan Awde. Jonathan is an investor and the CEO of Dakota Gold, a gold exploration company focused on revitalizing the Homestake district surrounding the historic Homestake mine in South Dakota, which produced 40 plus million ounces of gold in its 100 plus year lifetime. He has raised over $600 million for private and public companies in the natural resource sector over the past 15 years. And he is passionate about the relevance of mining today and how it can be done with respect for the surrounding environment and communities. And we are so excited to have him. And also joining us today is my co-host, Jordan Mitchell. So Jonathan, thank you so much for being here today.
It's a pleasure to be here. Excited. Thank you so much.
You are our first gold mining company that we have had on this podcast. And so I am just excited to hear your origin story. How in the world did you get involved in this world of gold?
So I've was raised in Vancouver, and Vancouver has had a long and rich history of being sort of the hub for small cap metals and mining. So a lot of the better ideas, at least in the Western Hemisphere, in metals and mining, kind of originate in Vancouver, and there's a lot of risk on capital that's located in Vancouver that supports and finances these opportunities. So when I finished university, I started at a small brokerage firm in Vancouver that had a long and rich history of financing small cap metals and mining. So that's how I kind of got my start. And in college, I took, kind of finance and economics. So we had the final year of finance class. There was a component to it that talked about gold. And it since then, it's really always been a big part of what I do.
What is small cap metals and mining? What does that mean?
Well, I think in the US, there's probably a different standard to what's considered small cap metals and mining, but sort of sub $100 million market cap.
Got it. Okay. And so you start off there. What brings you to South Dakota?
So I co-founded a company called Gold Standard Ventures in 2010, took it public in 2011, and it was sold to a larger mining company called Orla Mining. That's a public company. It's about $1.5 billion market cap. And my business partner and I, Bob Quartermain, who is a mining Hall of Fame guy, legend, the two companies that he co-founded, one of them is called SSR Mining. It's a $4 billion company. It's still public today. The other was a company called Pretium that was bought out for $3.5 billion and is now Canada's fourth largest gold mine. We were looking for opportunities. We came across this public company called Dakota Territory Resource Corp, which was led by Jerry Aberle, who was the last mine manager when Homestake shut down. So South Dakota guy, born and raised, went to the South Dakota School of Mines, and he, engineer and did a great job of assembling this land package, but didn't really have access to capital. So we were introduced to this, and what was appealing to us was to be kind of the first mover in the district. Not a lot of work has been done in this district since Homestake was acquired by Barrick in 2001. And we leveraged our relationships with Barrick, which is the world's second largest gold producer, that bought Homestake. And we were able to negotiate the purchase of three different assets from Barrick. Two of them are under option. And then significantly grew the land package from 5,000 acres to 50,000 acres. And we looked at, dozens of different opportunities and liked the opportunity to grow this platform. You're in a red state, you're in a country where rule of law still applies. And there just hadn't been a lot of work that's been done in this district for 20 years. So when the mine shut down, gold was $300 an ounce. And now gold is flirting with $2,000 an ounce.
Wow. So the reason it shut down was just lack of money, lack of resources, not lack of gold in the ground?
Essentially, yeah. So in the mid 90s, Homestake was producing in South Dakota, and they were faced with a choice of reinvesting hundreds of millions of dollars back into the old mine to refurbish the mill, underground development, a new shaft. And they ultimately chose to buy a public company called Plutonic Resources in Australia. So they didn't have any other capital to reinvest back into the old mine. And of course, gold being under $300 an ounce, it was a very challenging time in the gold industry. Kind of like when oil is $15, $20, $30 a barrel. It's margins are tough. Most companies are kind of bleeding. So it was a tough time for the gold industry, and that led to the acquisition from Barrick in 2001.
Okay. Now, getting into that world, what was that like? Was it smooth sailing? Was everything up and to the right, or was it challenging?
Look, I mean, if it was easy, everyone would be doing it. But I think that we both saw sort of the perfect fit in merging kind of Quartermain's and my commercial expertise and Bob, as a mine builder, and our sort of access to capital with an area that has so much historical relevance to not just U.S. gold mining, but gold mining on the planet. This is still to this day the largest gold mine in the history of the U.S.
Wow.
And we've surrounded it, and we've got an option over the surface with Barrick, and just the data we got, 125 years of data, was in paper format. So we spent almost 2 years digitizing everything painfully. And I think we kind of underestimated just how much data there would be. But having that local expertise, having that local knowledge was invaluable.
Wow. Now, why do you think it is, like, as just a person who's, living in the United States, and I actually do somewhat, I told you I like watching Gold Rush and Bering Sea Gold and that kind of thing. I'm aware of the current and past, California, Alaska, areas having a lot of gold. I'd never heard of South Dakota. Why do you think that is?
Well, I'm 46 years old, so I graduated from university when the mine was shutting down.
Got it.
So sort of our demographic is not as familiar with the Homestake district. But you look at U.S. gold mining today, it's the third largest gold producing region in the world, where 82% of U.S. gold production comes from Nevada. So the Carlin Trend, the Cortez Trend, and a lot of that's controlled and owned by Barrick and Newmont. So there's been very little exploration work, very little that's gone on in South Dakota. There's one producing gold mine in the state of South Dakota, and that's owned and operated by a company called Coeur Mining out of Chicago. It's a public company, but there has not been a lot of exploration and development in the state of South Dakota since the mine shut down.
Got it. So in our generation, it kind of fell off the map.
Yeah.
Now, how much further do you think it has to go? Like, are we getting to the ends of like, hey, this has been around 100 years and we've mined almost all the gold that's there, or is there plenty of untapped land that you believe is still available there?
Yeah, I mean, there's a saying in the mining industry that the best place to look for a gold mine is in the shadow of a head frame. And, I think because Homestake had so much success following this ore body down to 8,000 feet, when they did actually step outside of the old mine and they started to explore, they were really successful. And that's all ground that we now have. And, this is private ground. So from a permitting standpoint, it's far more advantageous to be pursuing the development of a gold resource or asset when you're on private ground. And we very strategically, we've done, I think, 39 individual land deals. We've done these deals with Barrick, and we staked a whole bunch of ground. And we did so when we were doing this merger, so we were in a quiet period. So, kind of heads down. When Homestake was formed, it was put together by an individual. His name was George Hurst. And his family trust, I think it's worth $15 or $16 billion today. That was a lot of wealth created from Homestake. And what Mr. Hurst did, he wanted to buy up all the surface rights, mineral rights, water rights, timber rights, and discourage anyone else from being in the district. So we were kind of planning ahead for success, based on the data we got. And the data we got really helped inform and open our eyes to this larger land consolidation. And it really helped with our drilling that we're doing currently.
Now, one of the things that it feels like, I've never mined gold, but they talk about gold fever. It feels like part of the enjoyment that many people have is similar to gambling, right? That I, as a gold miner, am here making this bet, and I'm getting in the ground, and every week, every day, I get to see, did I make the right bet? Did we dig the right spot? Is it similar at your stage of the game, or kind of being at the bigger, above, not above that, but like, owning more facets of it and moving more pieces? Does it feel a little more calculated than that?
Yeah, I would say that's a great comment that you just made. I would say that there's a lot of people that don't do a lot of upfront due diligence and don't look at it from, exploration development to permitting, to where you are in the cycle. Do you have the right people? I think having someone like Bob Quartermain, who's my business partner and co-chair, who's built 2 multi-billion-dollar companies, the way he approaches things, very process-oriented, really aligned with shareholders. And it's, sometimes tougher to build a business in an industry where there's so much short-term money when you have to look long-term, because there are cycles, commodity price, what's the Fed going to do, interest rates, inflation. There's all these factors you have to consider. But I think when you actually let the data speak to you, you can eliminate a lot of poor decisions. And people get, these biases, or, they have the blinders on because they want to do something, or they're chasing something. But when you really look at the information, the data objectively, you can eliminate a lot of bad choices.
Yeah. I mean, we see that a lot in business, right? Where you almost play superstitiously. Like, I got a hunch and I'm just going to follow that hunch. And sometimes you're right. Some of the most greatest discoveries have happened that way. But you also see a lot of people in gold and in business go bankrupt, because they didn't think a little more strategically or zoom out a little bit. Yeah.
Yeah. And I think one of the reasons why a lot of businesses fail, one of the most common reasons, is being undercapitalized. And there's always things that can happen, that can go on, that are unforeseen, but you have to kind of factor that in and build that into your models, because no one can predict where the gold price is going to go. No one can predict where rates are going to go. And of course, in the gold space right now, it's really interesting, and we'll talk about that later as we go through this. But typically there's an inverse relationship with a strong gold price and the dollar. Stronger the U.S. dollar is, typically the weaker gold is. But you're seeing a lot of strength in the gold price right now. Now, some of that might be geopolitically, but it's really interesting. And I think that, gold in the U.S. as an asset class is dramatically under-owned in the U.S. Less than, I think, 5% of U.S. citizens have any exposure to gold, which is super interesting.
Yeah, that's something I'm definitely not, versed in. But I hear, you every now and then you hear people that have, I guess, safeguarded some of their investments by having a certain amount of their money in gold versus just traditional stocks and things like that. Is that kind of what you're talking about?
Yeah, I think gold has long been viewed as a hedge against inflation, or a store of value. And I think that, the interesting thing from my perspective, being a finance and economist, is, just the debt that's been accrued in the world, especially in the U.S., with, just under $34 trillion. And with the U.S. running $1.5 to $2 trillion annual deficits, and now the cost to service that debt is almost $1 trillion a year, which is more than the U.S. spends on their military. At some point, that's not sustainable. And, the U.S. dollar will still be the world's reserve currency for decades to come, but you'll probably see an erosion every year of down 1 or 2%. And I mean, next year in the U.S. alone, there's $7.5 trillion worth of government debt that has to get rolled over. And that's at 2.4%. And that'll get rolled over at 4.5%, 5%. So if you look at the cost to service this debt, it's getting to be a very meaningful number. And that's what's kind of scary. And whether you're an investor in gold, this, every investor should be thinking about this because it's becoming a real issue.
All right. So help me kind of connect the dots on this if you can. I understand just from an average person, not a finance background, that it seems like we're in an incredible amount of debt as a country, and that debt is getting worse. And that could create some issues. Where does gold come into play? Like, help me just make that final connection. Like, therefore, it would be smart if we had, more investment in gold because it's a safer, protected asset. Or how do I think about that?
Sure. So I think clearly I'm kind of talking my own book and the book of my family, but
yeah.
But I think as a hedge against inflation and an insurance policy against, the U.S. debt, U.S. debt situation becoming unsustainable, and there's a collision course, there's an inflection point coming, but I think because you're seeing really strong physical demand in gold, there's only so much gold above ground. And I think that's part of the opportunity is money is not flowing into the gold funds or into the gold ETFs yet. And I think that's a real opportunity when you'd be like trying to drink through a fire hose. I think because the gold industry is such a small asset class on a global scale, it won't take a lot for, money to flow in for these equities to be up 1, 2, 3, 4 times from where they are now. So I think as an asset class, it's been beaten up. And I'm a contrarian, so I love looking at things that have been hammered, that are down 60, 70, 80%, but there's a real business there. And it's not just gold, it's the mining space. And if you look at copper, for example, so there's been 700 million tons of copper mined the history of this planet up till now. The world needs twice that to be, net zero, carbon free by 2050. So the mining industry gets such a bad reputation, but yet everyone wants a new iPhone, a new iPad,
Yeah.
Everyone wants a new Tesla. And the only way that can happen is through responsible mining. And that's where, I have 4 kids and, up until recently, they all said, Dad, you're mining, that's terrible. You're destroying the earth. Hold on, time out. And then when you take the time to educate the younger generation, they're like, oh, I get it. Okay, yeah, we all want more solar, more wind. But when you take the time to understand how much metal and what kind of commodities go into making a solar panel, or just how many pounds of metal are in a Tesla vehicle or an EV, you won't get there any other way than mining.
Yeah.
And so, the U.S. and Canada, I don't want to talk politics, but the U.S. and Canada has such a rich endowment of almost every single metal, oil and gas, everything. And some of the policies that our governments have chosen to make are making things more expensive and are reinforcing this inflationary environment when we're offsourcing and to other countries, and we have everything we need domestically as Canada and the U.S. to compete on every level on a world stage. And that's what's challenging for me, is that this inflationary picture probably doesn't go away for a while.
That is super interesting, because we saw a lot of that during COVID, where it was exposed how much we were actually relying on the rest of the world for everything. And then all of a sudden, when the distribution channels get shut down, we're like, we got no more masks, we got no more this, we got no more that.
Yeah.
And I think we all woke up and go, well, hold on, I didn't know we were outsourcing that much, right?
Yeah.
And so how much potential is there, especially in your industry, for, like you said, how do we have a lot of resources right here that we could be utilizing?
We do. When you look at the combined endowment that Canada and the U.S. have in terms of, almost every metal, every strategic and critical metal, one thing the U.S. is doing that's been great is, critical metals are being viewed as strategic metals. So the U.S. government is saying, basically, how can we help you develop this, process this? Can we help accelerate the permitting, which is great. And for some reason, copper is a strategic critical metal, according to the U.S. government, but there's half a dozen copper projects that are being slowed down with a bureaucratic permitting environment, and it's frustrating. But I think in a democratic environment, that's probably not. You kind of expect that for it to be a slower process. If the Republicans get back in, maybe some of that gets undone. But I think, again, it comes down to the way mines are built nowadays, as you know, how they were built 50 years ago, 70 years ago. It's very different. And, you know, I think ESG, so environmental, social governance, is such an important part of building a mine today. And that's where, you know, coming back to Dakota, Bob and I knew that partnering with local expertise who are from South Dakota, born and raised there, was so important for us.
Just going back to copper just for a second, is copper unique in terms of how it's mined compared to some other metal that makes it something that people need to go through the hoops? Or for the most part, you feel like, no, it's a political conversation that it's just mining in general and it's just getting shut down or getting held up?
Yeah, I mean, I think there's more of an openness within the U.S. now, recognizing that if the world wants to get to net zero by 2050 and wants to dramatically lower the carbon footprint, like I said, we need to mine. We need to not just mine. We need to find. You know, the problem is there's been such an underinvestment in exploration. We need to mine in the next 27 years more copper than we've mined in the history of this planet. It requires significant investment, you know, time, but also collaboration. And you're just not seeing that. There's you know, governments want a bigger, you know, piece of the pie. It takes longer from a permitting timeline, and there's all kinds of social issues that exist. You know, there's a big protest right now in Panama, where the government signed an agreement, and then there was public outroar, and now it's going to a vote. You know, in certain countries in Africa, there's been a huge royalty put in place. So it's a tough business. It's tough enough to find it, and then you have to do all your metallurgy and your development and permitting. And if you need to raise money, and you're going to have startup kinks, it's a very tough industry, and one that has a bad reputation, and maybe rightfully so. But I think there's been a lot of good that's been done. But the only way the world cleans up its own act is through mining.
Yeah, I like that. So take us back to South Dakota. Tell me a little bit about responsible mining, right? Responsible mining versus non-responsible mining versus what was done in the past. What are we doing now? And why does having the local team, the local, you know, crew in South Dakota, why does finding them even matter for this as well?
Yeah, I think when you look at the messaging that the governor of South Dakota has put out there, really wants to support and create opportunities to keep the educated youth in South Dakota. And, you know, so here you've got the first big thing for the state of South Dakota was gold mining. And, you know, it really put South Dakota on the map, and it really paved a lot of the wealth in the western part of the U.S. is from, you know, the home stake. But you just look at you know, permitting, you look at bonding, you look at your tailings management, you know, you look at the number of permits you need to build a mine. And, you know, Lead is a small town. Deadwood's a small town. You know, this is right in the heart of where this mine was in production for 125 years. And you had massive community support and buy-in. It was the biggest employer. It was the biggest source of revenue for Lawrence County, which is where the county that these two towns are in. And it just became a part of their culture. And, you know, some places, some states are more supportive of mining than others. And this was an area that has a deep, fond, supportive, you know, kind of culture of mining, and there's a desire to support it, you know, in the right way. And I think, you know, President Biden is looking to give preferential treatment to mining companies that are repurposing already disturbed land. So we're not actually creating a new footprint. And I think that's a really important part of our strategy. We're trying to minimize our footprint. And a lot of what we're looking to do will be underground. So there will be no surface, you know, footprint. Those are things that we're really trying to do to help, you know, alleviate any surface disturbance.
Yeah. It seems like there is both a marketing issue, like a PR issue, as well as just some real changing of practices that make more sense now than did then. But you mentioned a show on Netflix called Deadwood that I'm going to check out that should highlight a lot of this specific story. But the stories that I'm familiar with are people like Parker Schnabel, from Gold Rush. And there was a particular episode where I got to kind of start to see some of the differences in practices and how they might be good for the earth versus not good for the earth. And he went abroad looking in different countries for some mines to invest in. And one he came to was using like mercury to, help separate the gold from the material. And he was just appalled at like, I can't invest in this mine. Like, mercury could be killing the people that are doing this as well as what it's putting back into the earth, versus things like he was doing, safer practices, but also even like the land that they used when they were done with it, doing things in a very intentional way that trees grow back, and eventually you wouldn't even be able to tell that was, mined out. Yeah. Is that similar to how you all are thinking about? It's like, we can do this better than it's been done.
Yeah. So for example, we have a bunch of drill pads. When we create a drill platform to drill from, we already have a bunch that are reclaimed, and you can hardly tell that there was ever a drill rig there. And part of the challenge the mining industry faces is, maybe there are certain G7 countries, or a certain environmental standard in the US or in Canada or Australia, parts of Europe. And then you go to third world countries where there is no standard. And so you see some of the things that are done, some of the working conditions, where whatever the closest stream or river is used as a garbage.
Yeah.
And, so it's tough because there isn't one standard. But in the West or in the G7, we're judged by a very different standard. And you will not get financed if you're not at that highest level.
Yeah. How did you explain? I'm curious. Like, how did you explain to your kids? Because I love when we explain to kids, we have to get simple with it. Like, how did you explain to them? Like, it's not what you think.
Well, so I just took my 18-year-old to university in September, and maybe 2 years ago, she had all of her friends over, and they were asking me about what I did, and you're in mining, a lot of eye rolling, a lot of judgmental comments, but then coming from a place where they know nothing. Like, I love my kids, but in the grander scheme of things, that they have a lot to learn, as we all do, and just asking simple questions like, okay, how many Apple devices do you have? Silence. Well, I've got an iPad, I've got a laptop, I've got an iPhone, I've got AirPods, I just got the new Apple headphones. Oh, okay. And then I said, do either of your parents have an EV? They both do. Okay. And, just questions like, when you go to Arizona or Hawaii, do you notice any more the density of solar panels? Yeah. Okay. Where do you think that comes from? Then this is where the interesting, because it's that they have to figure it out on their own, and they have to be able to connect the dots for it to truly, kind of have the chance to enact some change. And then, it's like, oh, well, where does it come from? It comes from mining, because the recycling market is like 1/10 of what's required annually. And again, but it's younger generation saying we don't want any emissions. We can't keep polluting the earth. It's temperatures rising. Those are all true. But if you're supportive of solar, and you're supportive of wind, and you want to have an electric vehicle, most people didn't know that until recently. 40% of the energy that powers EVs comes from coal.
Right.
Yeah. Right. So
we like to see them as totally distinct, separate things.
Yeah. So that's where just education, and then kind of removing the sort of ego or emotion, and they all just went from being mining is bad to, okay, we need mining. There's got to be some kind of compromise to what happened over the last 100 years or 200 years, and to maybe where we should go. So that was kind of rewarding to see, and just taking the time, 30 minutes, no cell phone, full engagement, and kind of a safe place, no judging, no comments, just really trying to understand where they were coming from. And a lot of the information the youth get today is on the internet, where it might not be vetted, might not come from a credible source, a lot of propaganda. So that was really neat to see that change, that light bulb go on.
Yeah. I'm curious, just as you look at your business and the things that you're invested in currently, or the direction it's going, what has you most excited right now about the future of what you're doing?
Well, I love how it is this hypocritical topic, but I love how it's the slow realization that the world needs more mining, and the only way we get to carbon neutral is through mining. And so there's been a massive underinvestment in almost every metal, and that is catching up to the current market. So I'm quite optimistic about where I think certain metal prices can be in 3 to 5 years. So that excites me, but I'm also really concerned about what's happening in Israel and the Gaza Strip right now. I mean, that's really scary. And one of the questions I think was what concerns you with what's happening, and that's a powder keg right now. I mean, and that's the anti sort of anyways, it's super scary, and it's a powder keg, and it has the potential to really spill over. And that is something that needs to be a solution to that before it gets out of control.
Yeah. Yeah. Oh man, that's a whole other topic. I don't even know how to.
That is heavy. That is heavy. I can take us in a different direction, but I do think that it needs to be acknowledged, and so I appreciate bringing it up, and the fact that like, hey, all of these worlds are intertwined, right? I mean, you kind of teed us up with how do I talk to my kids while helping them understand the bigger picture. Hey, understanding 40% of your, of your energy made for these EVs is coming through coal, right? So some of those bigger perspectives to bring in some of the humility is there. But here's a thought. So I just wrote down some things, thinking about things that you said, and I'm thinking about just like almost how would you speak to an aspiring entrepreneur who's looking at opportunity? Because I think some of the cool things about this conversation today that I hear is like, hey, there's opportunity, right? And I wrote down like, one, okay, there's the opportunity for exploration, sub copper, but you just mentioned just a second ago, hey, many of the metals are under resourced, and there's exploration is going to have to be a part of that equation. And then I hear capitalization, right? And going, hey, a lot of these projects or any entrepreneurial project is going to fail because they don't have the capitalization. They don't have the capital available for them to continue on. And then other things I hear like, hey, the local economy opportunity, right? Hey, in South Dakota, it's really cool because they've always been doing this. It kind of feels like the origins of their economy are right here. And so we're bringing that back. Some more jobs are coming back. We have some, the educated youth are having opportunities to stay. Very inspiring, but that's going to provide opportunities anywhere. And maybe that local environment isn't one that has had this in their history, but it still provides local opportunity, which sounds to me like a really cool entrepreneur opportunity. And then also just the mining standards, right? And that part of the equation. And so I just highlighted those as like, hey, those are 4 big things that you've talked about that all feel like a mix back to like, hey, this is a hard thing to do, but it does provide a pretty cool opportunity if you have an entrepreneurial spirit to go create some change. So anything that you would speak to just the aspiring entrepreneur who wants to do a hard thing and a good thing that's needed, anything that you'd speak to there about like, hey, you want to move into this industry and they don't have the history that you do. Any thoughts on that?
Yeah, I think. Look, I've always been an entrepreneur, and you've got to work your ass off, and you're going to get a lot of no's, and some people can't handle rejection or failure, I've sort of always viewed it as you're one step closer to a yes or to success. And, I think the biggest challenge that a lot of younger entrepreneurs face is trying to balance family and work. And you have to have a partner that supports you, that doesn't judge you, that lets you be you and supports your dreams. But it's hard work, and it's managing a private company versus managing a public company and the public aspect. But I think aligning yourself with really good people who are really smart in areas that you're not, and then the whole team concept of it being a meritocracy, of the best idea wins, not necessarily yours because you're the CEO. And for anyone technical, whether that's a geologist or a mining engineer or computer science, being able to talk to a finance guy, the person who's going to write the check. If you're speaking, gibberish, or you cannot articulate why you're excited, you will not get funded. And that's something that I think they need to teach in universities. Is people get all nervous about raising money. You're where you were when you started the conversation. So, when I was putting together Gold Standard, we probably got 50 no's before we got financed. And then every pitch, every meeting, you get a little better. You get a little more confident. And, I think when you're humble and you have good mentors that have been there, done that, and, want to see you succeed and are willing to push you and challenge you. I've got a life coach, like a Tony Robbins life coach that I've had for over a decade, and he calls me out. He holds me accountable. We set lots of goals, but surrounding yourself with really good people, the right mentors, who don't have an ulterior motive or different agenda, I think is really important.
Awesome. Really good, Jonathan. So yeah, what I was just sharing with you was that honestly, I think those are like 5 things to win at life. And those could be coined for you. But again, good for any entrepreneur. But just thinking about anybody trying to find better in their life, whatever that looks like. I mean, just writing your 5 things down. Face some no's. Like, be willing to do the hard work. Right? You mentioned family and work. Like, you got to have a partner to find some balance, right? But like finding a good partnership, right? That's important in marriage. That's important in business. Like you've mentioned, at least 1 or 2 business partnerships that you've had that are huge. Align yourself with good people and let the best ideas win. Right? Like meritocracy. Don't get used to just hearing yourself. I mean, a business partner that I had talked about how easy it is to become like the dinosaur or the T-Rex with like the big head. Smashing their jaws, little arms of influence, and you don't actually have a team. And then, even just the technical of like, don't get caught up in your own expertise, be able to speak to the finance guy, be able to learn that language too, right? I think that's just a good challenge for anybody going, hey, do you know how to speak that language? And almost treating it like you better go find some Rosetta Stone for finance if you plan to be successful. And then just be humble. And be humble enough to be mentored. Like you put humility and mentors together, but I think that was huge, right? Is thinking about like, do you even have the humility to be coached? I was just on a coaching call this morning, and I was talking to I was playing role of coach, talking to somebody, and I was like, hey, they were talking about one of their top performers in their business, and we had talked about, about this person for like 20 minutes, talked in and out of the conversation, really trying to think about, hey, this is that high performer. We want to see them get to the next level, but it's been about 12 months right now, and they're not getting to where I thought they would be. What do we do here? And there was a part of, we kind of got to the end, and I just said, hey, is there anything that you need to do to help with their development? And gave her a little framework to think about how to help humans develop overall. But she just said, I've been making some of these conversations like optional. Maybe I need to make them mandatory. And I thought that is probably what you need to do, but it's also a sign of that person who wasn't yet maybe humble enough to say, hey, I need the mentorship. Like the COO is ready to serve me right now, every day, would give me time, anytime, but they're not raising their hand, right? And they're trying to figure it out on their own, maybe because of self-preservation or whatever that is.
And you can save so much time.
And so I think those are killer.
You can save so much time and pain and headache by asking the right questions or having that mentorship. I try to not be judgmental with my kids and try to push it on them. Ultimately, they got to figure things out on their own. And my wife and I, we want to support them. We want them to find their own passion, because that's what we've been saying. Like when you won't consider it work when it's your passion, you'll consider it work when you don't care about what you're doing. I don't have an interest in learning. And we always say, knowledge is power. So, and we try to, we live in Vancouver. We live in West Vancouver, which is an affluent part of Vancouver. And, we try to not raise entitled kids who are victims and but they're also used to pressing a button and getting what they want.
Sure.
So it's lots going on.
Well, I think on the fourth point that you made, this idea of speaking different languages, Jordan and I, at least I had a funny moment where we hired a sales coach, because for he and I, we knew the business of delivering the product, which is, coaching leaders, coaching executives, coaching performance, but it was different in how do you actually have a sales conversation that leads to more people choosing yes, right? And so he had us run through some stuff. He's like, all right, give me a sales pitch. Like, how would you have this conversation? And what he said was, he goes, Drew, do you speak French? I go, no. He goes, well, you don't speak the language of sales either. And I was like, whoa, what does that mean? And he's like, you're talking to me like a coach, meaning you're talking about the process and you're talking about this and that. He's like, you're not talking to me like a salesperson in a positive way. He didn't mean salesperson in a negative way, but like, you're not talking about what they need to hear. What's the result? And he kept talking about the language of results. Someone just wants to know, what's the result? What's the value of that result? All that kind of thing. And I was like, you're right. I don't have a clue how to speak that language. And it sounds like probably what a lot of entrepreneurs have when they go try to get funding is they're speaking as a, they have knowledge of their product and they have excitement of the ins and outs of it, but they don't know how to talk to an investor. Is that kind of what we're talking about?
100%. And like, it's really about knowing your own audience, like knowing who you're speaking to. And I mean, if you go to New York and if you can't, explain to a fund manager, an investor within 2 minutes of what you're doing and how you can make the money, get out, because there's 100 other guys that want to come in and get funded. So, that's really important. And look, it's like there's so much emphasis on, short-term performance and, how do you build a business when it's such a short-term, quarter to quarter. And, again, that's where, people, and if you're in a position to choose the kinds of investors you want to align with, it's you'll be way better off.
Yeah. I got a kind of off the wall question. And this may be something that's already happening. And if so, I'm happy to know about it. But I like to think that the easiest way to motivate people is when you take what they're already motivated by and align it to a better purpose. Right. And so like, if we can't help the fact that most people in the West are going to be motivated by capitalism, motivated by more, then how do we incentivize them to care about things that are good for the planet or your industry? Well, let's merge those interests, right? And so an example I was thinking about is one of my friends has found a way to help both with his taxes at the end of the year and get, more profit, is to invest in certain like oil and gas mines, like a specific oil and gas mine. And if it does well, they make a profit off of it because of their investment. And there's also some tax some tax implications that are incentivizing to him. And it's like, hey, however that just went, that was a way that they just got my friend's money in that industry that he wouldn't have done had there not been some incentive, right, for him. Is there a way in which gold mining could be similar, where we could invest in a mine that you all own or something like that, and there are those types of incentivizations for us to get more in the game than just buying gold or investing in the stock market?
Yeah, I mean, I think when you're looking at, we'll use the gold mining sector as an example, one of the first things you should look at is, does management have any skin in the game? Are they aligned? If you're going to buy some shares, did management get all their compensation through performance units, RSUs, stock options, or did they actually write, a meaningful after-tax, dollars going into the company? That alignment is really important. So that's one way to align incentives. And then I think when you're looking at, our compensation committee has, certain performance metrics tied to outcomes, and those outcomes, if achieved, are great for everyone. And that's one way that's worked for us. But just making sure that our values are aligned and what's important for us. So I found that's also been quite helpful. And it's just we have some people who are just happy to go into work every day.
Yeah.
And they're absolutely blessed to have a job, and they've got an amazing attitude. And then there are other people, not in our company, because we have a no asshole policy in our company, but it's, they always want more, and they want to skip 4 legs in the ladder to get to the next place before they're ready. And the challenge is a lot of people compare themselves to somebody else. So you see somebody driving a car or has the vacation home or whatever, and you don't understand all the work that's gone into that. And you want that. And just because you show up doesn't entitle you to have that accelerated path to there. So that's a challenge that, I think all employers face is how to manage the expectations of your employees, but that's where hiring wisely. So that's certainly with the younger generation. My wife owns 2 F-45 studios in Vancouver, and she has it's like have you guys ever gone to F-45?
No, but I've heard of it.
Yeah, like Mark Wahlberg's like the biggest shareholder, and it's now a private company, but he does this crazy 4:30 a.m. workouts, and it's like CrossFit meets personal training, a lot of body weight, and it's a lot of fun. And so a lot of her employees are younger, they're trainers, and they're wonderful human beings, but the moment they get offered $2 more an hour, they want to go somewhere else. So it's like you spent all this time onboarding and training and the culture, and then they go somewhere else. You're like, well, what happened? And that will change with where rates are, and if we do tip over into recession or just not as hot of an economy that we've been running on.
Yeah. Well, it's funny. You mentioned something that I actually heard live a few weeks ago. I was brought in to speak to a bunch of these different business owners, and one of the questions I got, I don't even know why we got here, but the question was, if I purchase a new vehicle, there's just an example, or I take a vacation, she's like, there's people on my team that will make little offhanded comments like, well, must be nice, must be nice. And she's like, what do I do about that? I was like, well, if it bothers you, my first question is, it sounds like you've got something that you're not sure about on the inside. So first off, why do you feel guilty about that? We got to figure that out first. And I said, second, couldn't your response be, it is nice, and if you want to work as hard as I have, I can show you how to get here, right? And I was like, I want you to embrace it as an inspiration that, like, sure, I've worked for the last 20 years and made sacrifices and did whatever so that I could afford what you just saw. And you at 25, if you want the same thing, I can show you. Does that make sense? I see that feeling a lot where it's like, must be nice. And then we're trying to figure out how to like dance around and justify instead of like, no, I worked really freaking hard. And this is one of the nice payoffs of what I've been doing the last 2 decades, right?
Yeah, I think you kind of nailed it. I think when you look at the hard work, the commitment, and I mean, in my world, I've lost, my mistakes have been millions of dollars in mistakes, but they're the best lessons you learn when you get your face ripped off, or you put money into something and it goes to zero, or you get lied to or misled, or why didn't I think of that, or your timing was off, and you learn and grow with every one. And then over time you make less mistakes, and hopefully you grow and you learn, and that starts to compound. But again, you look at knowledge is power, and full immersion into a particular subject is really, really important. But again, there's so much comparing yourself to someone else's situation when they could be totally different. Be your authentic self, do what makes you happy. But there's some of the happiest people I know are like ski bums who one of my best friends, ran a very successful hedge fund and sold it 10 years ago. And he skis 4 months of the year. He surfs the other 4 months, kind of invests. And he's like the happiest of all my friends, and has a very simple life, but is very happy. Whereas I know people who have gazillions of dollars and houses across the world and private jets, and they're miserable.
Sure.
So, I mean, find your passion, try to have that balance. So there's no right formula that works for what might work for me is different than you. And
Right. Absolutely. You mentioned having made decisions or having been in situations where it felt like you got your face ripped off.
yeah,
How did you, I don't care about everybody else, how Michael Jordan did it or whoever, but for you personally, how did you show emotional resilience? Like what kept you to get back up and keep moving forward versus it stealing all your confidence and you take your ball and go home?
Yeah, I mean, I learned a long time ago, my first boss in the industry, just said, look, you're going to have lots of losses. And you have to get to a place where you react the same for a loss as you do for a win. Because you're going to have lots of little losses, and hopefully you can recognize your losses earlier on and cut them, move on. And losses are part of life. Failure is a part of life. And what you do from those is what really kind of defines us. I think when I was younger, when if I would have a big loss financially, it would have a greater impact. But just that, no sense in playing the victim. Dust yourself off. Learn from it, and move forward. I've just never been sort of a quitter. So, I tried to learn from them, and now it's you have these battle scars from a couple decades of doing this. And you just, again, you sort of work with good people, surround yourself with good people, and ask lots of questions, and kind of stick to what you know, and have the best people that are experts in areas that you're weak. So, as I've gotten older, it's been it's never easy taking a loss or getting your face ripped off, as I said. But again, it's usually a consequence of wrong timing, missing something. Your ego allowing you to drink the Kool-Aid, or not recognizing subtle signs that things aren't working out. And we all get these blinders on, and that's where, just for me, when I make an investment, what's changed from that, business plan, from the thesis. And if things have changed, then you need to look at that data and make a decision, whether you take a loss, you sell, or you double down, or whether you get more involved. But to be unemotional from it, because it is just business, unless someone is going out of their way to lie, steal, or cheat, that's different.
Yeah. Do you have a favorite loss?
Yeah, actually I do. So about 15 months into the business, this was 99, 2000. So tech stocks are booming. I made $1.5 million in my first year as a broker, doing lots of trading and lots of investing.
Wow.
And I was a young, green, 23-year-old. And losing all that money, and then because I had part of that on margin, so not only did I lose that, $1 million, whatever, I ended up owing the brokerage firm like 50 grand. So it was super humbling, because I thought I was really smart and had it all figured out. So that's where it really taught me to be humble. It's a long-term business, knowledge is power. And, overnight wealth, you have to grow it. It takes time.
Yeah.
And that's where a lot of the kids today, who are in Bitcoin, there's a couple guys here in Vancouver that did really, really well. And the challenge was some guys didn't actually sell their Bitcoins, and they would borrow against this newfound wealth. So then when Bitcoin came off, these guys had to sell assets and got killed. But when Bitcoin went from 7,000 to 68 or whatever the top was, there was so much wealth created, on paper.
Right.
But until you monetize that, it doesn't matter. So, so that to me was an awesome reset. I wasn't married, didn't have any kids. I had myself. I wouldn't want to go through a nasty situation where my net worth went to zero at 46 with a wife and 4 kids. But I learned that, and that taught me, to be humble, just to look at things differently. So And, you know, I do believe in karma and how people who are really cocky and loud, you know, typically are the weakest guys in the room. And the world has a crazy way of writing those situations.
I like it. I like it. No, I mean, it's definitely, you know, a world-class example of the growth mindset versus the fixed mindset, right? That, like, really how you just framed it for us as listeners really is a great example of a growth mindset. Where's the lesson? How could this make me better? I'm playing a long-term game. I'm expecting to keep going versus that fixed mindset that, like, this just exposed me. This just showed me I'll never be a success. See, there's the evidence. I tried this thing and it failed, and now I'm going to quit, right? So there's a really robust, almost an anti-fragile kind of mindset surrounding your ventures right now that seems to even take losses and spit it out into some sort of lesson or progress.
Well, I listened to, do you guys ever listen to Jocko's podcast?
Yeah.
So there's a podcast, it's one of the earlier ones, and he talks about
Is it
what he
good?
does. Pardon me?
Was it where he says good
Yep.
whenever things happen? Yeah.
Yeah. So
Explain that.
yeah. So just, you know, Jocko was he would give different scenarios where, you know, they'd be in a really, really hostile environment and something would go wrong, and he'd be like, you know, good. You know, he lost his kit, you know, good. You know, hurt himself and had to dig deep to go on, you know, good. And that's,
Yeah.
you know, I think you can look at those, you know, situations and quit and not try, or dig deep and move forward. And, you know, great things happen when you're outside your comfort zone. And I think that, you know, I did this whole Tony Robbins thing 10 years ago where I walked in the hot coals, and there were 4 amazing things with Tony. And the last one I did, we were trained by, like, you know, SEAL Team 6. And Drew, you actually look like a SEAL guy that was on Jocko, you know, years ago. I can't remember his name. I'll get it for you. You do look like, are you a SEAL? You can tell me.
You're making me feel so good. I wish. That's amazing.
Yeah. So that whole mindset, I try to take from that.
I was talking to a Navy SEAL this morning, though, so
Okay.
maybe he rubbed off on me. No, so did you go to the Date with Destiny? Is that what it's called?
Yeah, I did the Day with Destiny. You know, walked on the hot coals, and then I did this. It was this membership thing where we did 4 events in 1 year. We did this appreciation and abundance in Africa with the safari. We got to rebuild a school, and that was really powerful. There was advanced negotiation, which was at his resort in Fiji, which is, you know, magical. There's a financial theme going in Whistler where a lot of people don't know this, but some of Tony's clients are the most successful money managers, you know, athletes, lawyers, politicians, you know, so getting, you know, Kyle Bass and Ray Dalio to speak at these events who are clients of Tony's.
Wow.
It was really powerful. And then there was a relationship seminar, which was really interesting in Hawaii. And that was about polarity, where when a man's in his masculine and a woman's in her feminine, polarity opposites attract. Although there was, it was maybe not the right fit for some people. That's a different discussion. But during that time, you know, every morning we were trained by this Master Chief SEAL Team 6 DevGuru, like, animal. And, you know, we were doing these kind of simulated sparring sessions. And if he didn't feel what you were bringing, I mean, he would make you feel that big.
Wow.
And this was a guy built like Jocko, and you were just intimidated. Even if you were a fighter or, you know, had any experience in that, it was totally irrelevant. I mean, this guy was such an alpha, and you get into the ring with this guy and you're horrified. And then he would just poke you and push you to bring out the best in you, to get outside of this shell. It was so effing humbling, but it was fantastic.
Wow. Man, super cool. Like, I've seen just from the outside.
Yeah. Wow.
Like, I watched, you know, his documentary, I'm Not Your Guru, which I thought was really helpful, especially if you were a Tony Robbins skeptic, which I wasn't, but he is such a big figure. that it was really cool to see how authentic his care was. That shone through in the documentary. Like, you can't fake this. You can't fake this level of care for people.
He does really care, and his wife is an amazing human being. But if you just look at who seeks him out and wants help.
Yeah.
It's the best athletes in the world across, any sport. It's, he was brought he's got an affiliation with the U.S. military, and there's some of the special forces that he was asked to come in to help improve the snipering scores or different parts of a military branch that were not where the U.S. military wanted them to be. And he would change it from, being bottom of the pack to number one. And, but it's very humbling because you have to be open and have thick skin because, in order to achieve the best outcomes for yourself, you have to get outside of your comfort zone, and it can be uncomfortable.
Yeah.
Yeah. Well, it's that. I mean, how do you get the calluses on your hands? Is by doing the hard work to get the calluses on your hands.
Which is funny. Most people would assume if you're gonna, and this is in general, if you're gonna go to counseling or if you're gonna go seek a coach or if you're gonna whatever, man, you must be really struggling. Which, by the way, if you are struggling, why wouldn't you? Like, that's great. But then you also find out some of the top people in their fields are using the same resources for that final 5% or that next edge,
Yeah. And Tony's about having these breakthroughs, right? So you'll be like pushing up against a wall, and the definition of insanity is the same thing over and over again. But he's about making these small little adjustments that can have this like magnifier effect where you get this massive breakthrough. And, so yeah, I mean, I have a lot of time for what Tony's all about. And the coach I have was through Tony. And I've had him for 10 years and I speak to him once a month and see him every time I go to Florida. And he's, ex-special forces, was an executive, has had his body like broken 10 times over and, finds a way to have some, physical miracle where he's running marathons again. And so super inspiring. And again, people don't know their own limitations.
Yeah.
When you're doing a push-up and I can do 30 push-ups and then you stop the moment it gets hard. No, you should be doing 10 more. That's where you get the real benefits, the real results. But that's almost in every industry. A lot of people, the majority of people quit the moment it gets tough. But then those same people want to judge people who are successful, who put in the blood, sweat, and tears, didn't sleep, challenging home life, or you sacrificed, and they play the victim.
Yeah.
What was maybe we'll end here unless Jordan, you've got another question. I know we've already used a lot of your time. What was the most meaningful breakthrough or most meaningful resource or thing that has come out of just that entire world, whether it be Tony himself or the coach you have or whatever? Like, where did that most meet your life in a meaningful way?
Yeah, I think I had an amazing mother and a shitty father. Okay. He taught me a lot of good things, but it would have been very easy for me to continue to play the victim. So I think when I first did that Tony Robbins, it was probably 15 years ago, and just, sort of eradicating that thought process, that belief, and that I had like no right being the victim because of where I grew up and all that stuff. And then when you sort of put things into perspective, it was like, okay, shame on you. Let's get rid of that way of thinking and so much to be happy for and blessed to have in my life. And, I think at that time I was comparing myself to other people or where I wanted to be. And then when you stop doing that, just the level of happiness and fulfillment goes up dramatically.
Heck yeah. Awesome, brother. Well, this is, Jordan, thank you for saying yes to this interview. He approved this one. I have loved talking about the gold world. I've loved meeting you. And even more so, just the last half of this interview has been so fun, meandering through a variety of subjects, but especially this last one. So appreciate your honesty, your vulnerability, and taking the time to share your wisdom with our listeners. This has been a fantastic interview.
Thank you so much, guys. I had a lot of fun. Thank you.
Founders, thanks for listening. We hope you enjoyed it. Make sure you subscribe to the podcast and hop into our monthly founder email so we can ensure you stay on the edge of peak performance and massive business results.